Okay. Welcome to all our viewers. Welcome back to our regular NFO series, where we speak with the top management fund managers of the AMCs to understand the new investment avenues and funds that are coming into the market. We understand its features, benefits, and get insights on why this particular fund is worth investing. And today we'll be discussing an interesting NFO, that is the Edelweiss Consumption Fund. Uh, to let our viewers know, the NFO period begins on 31st January 2025, and the subscription will remain open until February 14th, 2025. To discuss more about this fund, we have with us with a very senior person from the finance industry, Mr. Trideep Bhattacharya, Chief Investment Officer, Equities at the Edelweiss AMC. He has over 20 years of experience in the field of finance and equities. He has keen knowledge of investment products and has extensive experience in portfolio management. So good to have you here with us, sir, and to discuss this fund and discuss this NFO with us.
Thank you very much for having me here, and thanks for the gallant introduction.
Thank you so much, sir. We will dive right into the discussion. I mean, this is about consumption. I think all of us know that there's an India consumption story, there's an India growth story. We keep hearing about all these different things, that how India is becoming more and more consumer centric. So let's talk about the investment strategy. That is, can you elaborate on the fund's investment strategy? That is, particularly how it plans to balance out investments between its core consumption, emerging consumption, and cyclical consumption within the consumption sector.
Yeah, great question to start with. I would say that if you look at these three buckets, which is core consumption, emerging consumption, and cyclical consumption, they are targeted at different consumption habits of the economy. The core consumption represents the roti, kapra, and makan part of the economy, where we kind of indulge in basic spends, which we eat on a day-to-day basis or consume on a day-to-day basis is the right way to go about this, whether it is kind of food or wear and areas like that. The emerging consumption part is the part where the consumption habits of India is changing. Now, this is where, as you know, that the average age of India is about 28 years, which means we are a reasonably young economy where people have just entered into workforce. This is a time when usually you see a pickup in consumption spending. And not only a pickup in consumption spending, but also pickup in the area or a change in areas where they spend. People spend more on hotels, on restaurants, maybe kind of, more entertainment areas and things like that. So this is the second bucket, which is a very interesting part to play the consumption story in India, the changing consumption landscape of India, and we call it the emerging consumption part of the fund. The third is basically the cyclical consumption. Now, by here, we want to play those parts of the economy from a consumption standpoint, which are seeing a cyclical recovery. For instance, post the strong rains last year, monsoon last year, the rural part of the economy is gradually recovering. And as that happens, in our opinion, FY26, which is a few months from now, you will see the rural economy gradually kick into gear. As that stands to happen, what that would mean is that we would actually kind of start to see the cyclical recovery in this segment of the economy. Likewise, many other segments of the economy which are kind of maybe in the process of gradually going up or down is something that we look to play. So these are the three different baskets of consumption that we are looking to play in our fund. And that's the reason kind of we called it out separately as core consumption, emerging consumption, and cyclical consumption.
Okay, sir, sorry. So the next question is about the sector. I mean, India has a diverse consumption landscape. And now with that diversity comes diverse sectors. So could you detail which specific subsectors or themes, I mean, which, within the consumption sector or consumption theme, will receive the most attention from the fund?
Yeah. So basically, the way to think about this is all those parts of the economy which benefit from or which are B2C is something that we will look to play. Now, the themes that we have in mind include beneficiaries of demographic dividend, beneficiaries of rise in income, as the young India gradually gets promoted and goes on to the higher levels. Trends like new age consumption, trends like moving from urbanization, from villages to cities to towns, premiumization, the changeover from Maruti 800 to maybe a SUV, and finally beneficiaries of easy credit availability, which are high value goods which people tend to purchase as they get available credit, which was not there earlier. So these are the themes that we would look for, and the beneficiaries of the same are the ones that we would look to play as part of our consumption fund.
Okay. So then, how will we select stocks? I mean, what's the stock selection process? What's the stock selection criteria?
Yeah. So the investment framework that we follow is central. It applies across the funds and will be applicable here as well. I'll briefly cover that. We call it FAIR, which is FAIR. F stands for forensics, A for what you call as acceptable price, I as investment style agnostic, and R as in robustness. What we essentially are trying to say as this in this acronym is that we are interested in bottom-up stock picking. We're interested in financially clean companies that can not only grow but have return ratios more than cost of capital. And at the time of buying, the starting upside to our estimate of intrinsic value should be 20% or more. In the way we go about doing this, we are investment style agnostic. So, whether it's value stock or growth stock, both of them find a place in our portfolios because we think that growth and value are joined at the hip. So, as a combination of these four principles, all the stocks that we will own, which and either value or growth are financially clean, have strong return ratios, and have starting upside of 20% or more, are the ones that we would look to own as part of this portfolio.
Okay. So then the next question naturally comes into the picture is that how does the fund manage risks, associated with one market volatility? I mean, given that right now we are seeing a economic climate which is actually quite volatile, and we are seeing some very sharp declines and sharp volatility in the market. So given that the fund is coming in such a scenario, in such a market condition, how does the risk management of the fund will work?
The risk management of the fund it rotates around two or three parameters. One is, first and foremost, is a strict adherence to process. The four principles that that I talked about, will be followed for each and every stock that we buy and own. Second, basically, we have a strict stop loss policy. If the share price underperforms versus the benchmark by a meaningful amount, we actually take corrective action so that the losses don't escalate. And third, we have basically weightage restrictions, wherein the percentage of the stock that we have in our portfolio follow certain prudent parameters that we kind of follow on an ongoing basis, so that we don't end up in a lopsided portfolio. We also make sure that the relative subsector weightage versus the index weightage is not more than 5% in terms of active weight. So what that means is we never go too much overboard or too much underweight in one particular subsegment. And finally, we stay away from taking cash calls. What that means is sometimes when there's a lopsided move with regards to markets, we don't get whipsawed by the same. So we found cycle after cycle that these kind of risk management practices have actually held our portfolios in good stead, and we believe that it will continue to do so for the consumption fund as well.
Okay. So then, what are the realistic performance expectations of the fund for short term, medium term, and long term? I mean, obviously, we would love high high performance always, but what are the realistic expectations? And then how do these expectations align with the historical backtesting that you must have done for the for the fund?
So, I mean, by regulation, we can't talk about future returns. So
Correct.
I will stay away from giving any specific return expectations. The only thought that I would leave you with regards to returns is returns in equity markets is generally linked over a long period of time with the earnings growth expectations of the underlying stocks. If you look at Indian markets, broadly speaking, the earnings growth has been to the tune of somewhere between 15 to 20%, depending on which part of the business cycle you look at. By no means this is a guidance for the returns that we are talking about. But if an investor holds on for 5 to 10 years, we think that owning a subsegment of this market, would lead to a decent amount of returns over a period of time, in sync with the earnings growth that we see in the consumption sector, and the company is linked to the same. I would leave it at that, saying that in terms of volatility, we are playing a sector which is low beta, and hence, particularly when things, as you said in the previous question, are a little kind of wobbly, it tends to hold up quite well. So it has a bit of downside protection. It has decent amount of earnings growth. So I think it should be a high Sharpe ratio product from where I am thinking about the consumption fund.
Okay. So then the next question actually is about the regulatory compliance and governance. So, what measures are in place to ensure regulatory compliance and strong corporate governance within the fund's investment process? What are the checks and balances that are in place?
So if you recall, when we talked about the process that we will follow, we call it a FAIR process. And in FAIR, the F stands for forensics, which is actually a term borrowed from crime, from the world of crime. Essentially, what we are looking to do is we go beyond the P&L, the balance sheet, and cash flow to understand, overall, if there is something missing, where the interest of the promoter or the principal shareholder is not aligned with that of the minority shareholders. We go through a very painstakingly difficult and long-standing exercise to kind of understand the behavior of different stakeholders, which are suppliers, customers, management, and financials, to see over the last decade or so how the company has dealt with the important stakeholders. And only once we are convinced about that, we give it a title of financially clean, and that's when we go ahead and own those names. So from a regulatory compliance and from corporate governance perspective, we play a particularly strong emphasis on the same. And we believe that, lack of negative alpha from corporate governance leads to positive alpha over a period of time. That's how we kind of adhere to regulatory scrutiny or regulatory, build regulatory uncertainty into our process.
Okay. Sir, actually, I will kind of circle back to our first question that as you mentioned that, you have these three consumption buckets, that is the core consumption, emerging consumption, and cyclical consumption. Now, in the long run, considering, the long-term nature of the fund, we want our investors to be invested long-term, that is around 3 years or rather more than 5 years, right? And, what is your vision for the Indian consumption story? Given that for the next decade, and how will the fund adapt to the potential changes in the consumer behavior, that is according to the three consumption buckets that we discussed, and how will the fund adapt to these market dynamics?
Sure. So in a nutshell, the launch of the consumption fund or the consumption fund has a structural positivity and a cyclical timing. The structural part of India's consumption story is the consumption in India going from $2.4 trillion to $4.2 trillion over the next 10 years. The drivers from the same are demographic dividend, rising income, urbanization, new age consumption, premiumization, and gain of organized sector from unorganized sector. We think that these changes in consumption habits will drive over a period of time the consumption from 2.4 trillion to 4.2 trillion. That's the structural story of India, which I think investors should play in the context of the consumption fund. But there is a cyclical side as well. The cyclical side is that, if you look at consumption as a sector, over the last 3 years, it has been weak. The shares haven't done particularly great. And hence the valuations are very reasonable versus its own history. And finally, if you look at some catalysts or the triggers going forward over the next 12-15 months, recovery in rural economy. Overall, the income transfers and some of the populist measures announced by the government over the last year resulting in consumption spending. And finally, planning commission related spending. All of these are likely to augment consumption spending over the next 12-15 months. Given this status, we are calling consumption to be the dark horse of calendar year 25, where we think the starting point may be weak, but as we gradually end 2025, consumption is likely to pick up. And if an investor has a 3-year view, then we are getting the shares cheap, earnings which are bottoming out, and over a 3-year time frame, we see decent amount of return, not only from a structural standpoint, but also as a cyclical standpoint. Hence, we think that while the structural story of India consumption is intact, cyclically as well, the timing seems just about fine, with almost about 10 to 15% correction in Indian markets.
Okay, so just a quick couple wildcard questions I would like to throw at you. First is how much will be the churn of the fund?
So we are looking at about 35 to 40% kind of a churn on an annual basis. That would mean an average holding period of somewhere between 12 to 18 months. That's what we are looking to do.
Okay. And sir, I think the subscription opens on 31st, that is tomorrow, the day that we are having. And right after that, we have budget. Will it have any impact on the stock selection and the other processes?
Of course, we would, hear closely what Honorable Finance Minister has to say with regards to spending plans. We will also we are hearing and digesting the plans of Trump and his team and its impact on India's consumption or India as an economy. And all of this we will kind of, capture in our stock picking so that it's kind of most recent and incorporates kind of, the latest developments that we have. And by the time we get to Valentine's Day, which is around about 14th of Feb, when the closure date is of the consumption fund, we hope to collect the checks.
Yes, I think that kind of sums up the entire conversation. Actually, we hope that it receives all the love that it deserves from all the consumers like us, like me, and get all the love that it deserves. Thank you so much for your time, sir. Thank you so much for taking your time explaining us this very interesting NFO that is coming into our market. I would like to remind our viewers that again, the consumption fund NFO starts on 31st of January 2025, and the subscription is open till 14th of Feb 2025. Do go and check it out, and all the very best to you, sir.
Thank you very much. Thank you for having me on the show. Bye-bye.
Thank you so much.